In the U.S., stock index futures fell into the red ahead of open as talk about higher interest rates reawakened fears in U.S. markets. Around 5:15 a.m. Eastern Time, Dow futures were down 62 points, indicating a drop of 64.78 points at the open. The Nasdaq and S&P 500 futures also pointed to a negative open for their respective markets. Jill Malandrino, global market reporter at Nasdaq, takes us through the general market sentiment and what is expected in a couple of days.
The focus for the holiday-shortened week in the U.S. remains on Washington, D.C. and the impact of Special Counsel Robert Mueller's latest indictments in the Russia probe. To some extent, this question got answered last Friday when the market gave back nearly all of its gains when early headlines hit about new indictments in the Russia case. Fear of uncertainty is perpetual on Wall Street, so any more noise out of Washington or new signs of rising Middle East tension, some of which surfaced over the weekend, could play outsized roles, especially once the regular cadence of earnings season winds down in early March and the FOMC rate decision takes over headlines. Another question that lingered over the markets last week and continues to is how long this period of elevated volatility might last. Though VIX fell from highs of 50, posted in the immediate shock of this month's sell-off, it still hasn't gotten much below 20. J.J. Kinahan, chief market strategist at TD Ameritrade, points out that the VIX barely ever got into the teens most of last year. So as long as it's up at these levels, there's a sense that this volatility might not be over just yet. Typically takes 2 or 3 weeks to plow through these higher volatility times, and this week we are just the third in this cycle. From the Nasdaq market site, I'm Jill Malandrino, global markets reporter at Nasdaq.